What's going on, everyone? Sal here, back again with another video, and we're going to find out where is the market going. Again, I got the SPX on the daily time frame. In my last two videos of where's the market going, I said stay long, and sure enough, you've been rewarded very handsomely for staying above this 10 moving average. That is my long signal. That is where, I am pretty hesitant to short, above the 10 moving average, because we know that that's where it can be very dangerous to short above those levels. Now, if you're following on the hourly time frame, you've already been fooled a couple times, and that includes me, right? Because even if you have a macro strategy or your to-go strategy, you still have money laying on the side at risk that you want to be taking chances on. And sure enough, if you followed me on Twitter, I was fooled by some of these moves here, right? I mean, on the 16th here, we had remdesivir news come out after the bell. That squeezed us. Then we had, of course, on the 29th, more remdesivir news, remdesivir being the, China news of 2020, all right? The China deal. I mean, that's the thing. Remember China deal? That was what kept us running in 2019. Sure enough, now remdesivir and its potential to possibly be the be-all, end-all of this is keeping us running right now. I mean, for example, in the last 25 minutes of today's price action, the FDA, along with Donald Trump, announced that that remdesivir had been approved for emergency use. So if you're basically about to die, you will now be administered remdesivir. And basically what they want to see is people literally walking out of the ICU after taking this product. And if that happens, right, because data is going to be collected, if that starts happening, that radically changes the outlook of the market. We can see, 3,200, 3,300, or all back to all-time highs very soon. If that's the case, if it comes out a week from now, a month from now, saying that this is the miracle drug that they think it is, oh man, I mean, as a put buyer, as a shorter, whatever it is, your short bias strategy is, you're going to get blown out, right? You're going to get blown out if that's the case here. So that's why you got to be very, very cautious moving forward. Now, of course, if I had to take a trade today, right, which I already did, yes, I'm going to be selling some calls here, all right? Why? Because it's incredibly lucrative to sell calls in the environment that we're in. We're still, don't have very much data in terms of the reopening of the states and how that's doing. We still don't have a cure for COVID-19. And with the price action over the last 2 days on an hourly time frame, you've gotten the justification to start selling some calls here. Now, when we say selling some calls, we're talking about within the week, right? We're not going to be adding 15, 30 days or a month or anything more than that, because this is such a liquid environment right now when we're talking about not having news about a potential cure that's out there now and not having any data in regards to how the reopening of the states is going. So if you're going to be selling calls, you want to be selling calls that have significantly amount of high theta burn on them, and that is weekly calls. Weekly calls have the highest amount of theta on them because you're selling them within the week that you are trading. So even if the market starts to move higher, you at least have time on your side, because the question is, okay, so the market is moving against me. Do they have the strength to, reach or possibly retest a high? If you got 15 days, you got 30 days, you got 35 days on those options, you're fucked, because now they're moving against you and they have a lot of time working in their favor, right? So again, be selling calls, but you want to be within the week in the environment they're in right now. Learn more about selling calls at my website, nodirectiontrading.com. Now, where do we have to look here? What are some levels that are going to be very interesting over the next couple days? I'm going to be looking to see if they're going to retest the high. All right. Can they get back to 2960? All right. Can they get back to that 2960 level? And then I want to look at an interesting level that was created back here on the 22nd. All right. We looked like we were going to be losing steam on that 22nd, that $6.6 million job, unemployment number. It didn't happen. It didn't happen because, again, that remdesivir news came out literally the day of, after hours, like 4:05, they dropped it. So they had it the whole day, and then sure enough, they released it on us, and that kind of got us up to the high. So 29.60, 27.23, 27.19, that goes all the way back to March, right? That was an interesting attempt at a support here too. So that obviously failed, but look how they came back and, hugged it again. So that's going to be an interesting, third possible attempt for longs to keep this thing going, right? To keep this thing going. But I foresee possibly a trending market. I think this could be trending for quite some time. Worst case scenario, I think, is probably 25.50, 25.60. I don't want to say that a retest of the lows is possible right now. I still would want to see that remdesivir be a complete failure before I would even mention that. And that data is going to be coming out very, very soon. Trust me. Now that it's out there, they are not going to waste any time getting that in front of the stock market, right? So we're going to be hearing about how that's doing a lot, and it's going to be used to work against you if you're selling calls. If you're someone who's long the market, you have every right to believe that the Federal Reserve and the president, the White House, is going to be doing everything they can this weekend to find some kind of narrative, some kind of catalyst to keep this thing going, because they cannot go into the election month with the market at 2,200, at 1,600, at 2,100. That would be a disaster for the White House, and they know it. So we've got to keep our eyes out for possibly more Federal Reserve stimulus. Yes, a bigger number. I'm talking 10 trillion, being placed in the market. I'm talking negative interest rates. It's just some crazy number that could be released over the next week and a half if we continue to see a slide going lower. We break this 27.23. There's going to be a stupid number put out there for a stimulus. I mean, I'm talking like, depression, those programs from depression. I'm double speaking there. You guys know what the fuck I'm talking about. I'm talking that kind of size, that kind of magnitude, 100x being dropped on your ass to keep this thing going. All right. But negative rates could definitely be on the table as soon as next week or earlier. All right. It's your boy Sal. Pay attention to those levels. Visit my website, nodirectiontrading.com, if you'd like to learn more about non-directional trading or selling calls or puts. Till next time, take care and trade well.